Okay. All right. And we are live. You know what I'm saying? We're live. We're live. March 12th. Today's March 12th. Hope everybody can hear me clearly. All right. Definitely hope everyone can hear me clearly. But we're going to be getting into some fun action today. I'm definitely excited for, not just this stream today, but just the week coming up, man. Just the week coming up. You guys feel free to go ahead and tap into the chat. Let me know, if you guys got any questions or, how you're feeling. If you got anything you want us to check out, want us to look at. Um, but what I'm gonna start off kind of like looking at today is, of course, we're gonna start off looking at the news, right? That's where, excuse me, that's where we always like to go ahead and start off is the news. But in that, speaking about the news, I want to actually talk about the news that everybody's talking about, which is the Silicon Valley Bank. And I don't want to just talk about this news. I want to talk about how this is going to affect our trading week, right? How this is going to affect, what it is that we're expecting, and how it is that we can prepare to respond. What's going on, right? And so that's definitely what we're gonna get into, right? So we're gonna hit on the news first, but with this Silicon Valley Bank action going on, man. I mean, we've been talking about this for a few months. I mean, if you haven't been following the channel or if you haven't had a chance to, there's a playlist called Weekly Market Outlook with all the recordings from these, weekly outlooks that I do. I mean, I trade multiple times live a week, but this is the time that we do on YouTube. Anybody has access, and we've been talking about the way that inflation, interest rates, the dollar, how all these different things would actually affect not only the markets but affect the economy, and in turn how those things would affect the markets. When it comes down to it, with the Silicon Valley Bank, crashing or collapsing last week is the better term. Right? With the Silicon Valley Bank collapsing last week, which is the better term, the reason that it went down is, very simple, right? And it comes back down to the interest rates, right? Interest rates have been rising, right? And why have the interest rates been, consistently rising? Why have they been consistently raising the interest rates? That is to keep up with inflation, right? At the end of the day, it's all a game of inflation and interest, right? Inflation and interest. That's the way that the Fed kind of plays the game. And those are the numbers that affects the economy, right? The global economy. And anything that affects the global economy, of course, is going to trickle down into what? The financial markets, which we happen to be trading in. You know what I'm saying? So at the end of the day, we have this week coming up, we have CPI. Right, we have CPI coming up this week, which is pretty much the inflation rates for the US dollar, right? And we're forecasted to be lower, right? So the last inflation number that came out was 0.5% on a month to month, right? So compared to January, the inflation rate is forecasted for February to have gone down, right? And, we're forecasting that from last February, that inflation is going to be lower in comparison to this February compared to last February. And then next week, right, we actually have the interest rates decision, which is going to be releasing. And it doesn't even look like we have a forecast for that. But the previous rates decision put us at a 4.7, yeah, 4.75%, right? So curious as to what this next one is forecasted at, because it doesn't even look like, yeah, it doesn't. There's no forecasted amount. It's interesting, right? There's no forecasted percentage right now. However, yeah, that's next week and that's this week. So two very important weeks back to back, especially with what you see going on with Silicon Valley Bank, right? If you're not familiar with what's going on with Silicon Valley Bank, essentially, Silicon Valley Bank is the 16th largest bank in the United States. Okay, they had a thing, or they were, I don't want to say a thing, but they were kind of they built their name and they were kind of building a reputation, I think is a better way to put it. They were building their reputation off of working with startups, right? Tech startups, all these different types of startups, especially ones, companies, your cryptocurrency companies, as you can see here, and just a lot of these digital companies that have been blowing up since the whole 2020, 2018, just this entire run that we've been in as a culture, as an economy. And what happened is that, of course, they took this money and they invested it, right? That's what banks do. Banks don't just leave the money, right, sitting somewhere. They invested that money. And going into last week, what we saw happen was that I mean, pretty much the bank was in trouble. All right, the bank was in trouble because interest rates are being raised, just like everybody else is in trouble, right? Everybody else got bills to pay, and higher interest rates on your credit loans, that's gonna hurt a little bit. Okay, higher interest rates were causing markets such as Nasdaq, right? If we were to pull up, the Nasdaq right now, and we can actually do that because we actually on the charts, right? Y'all give me some likes, right? Y'all give the stream some likes. Definitely helps the stream out, right? If you getting some, if you get some value. But at the end of the day, you can see that last week, right? Last week we had a major sell-offs on. This is what we're looking at right here is Nasdaq 100, right? And you can see last week, this is last week Monday here, major sell-off last week Monday, right? Major sell-off last week Thursday, and not even just that, right? We had major sell-offs in February. Okay, so we're starting to see a lot of bearishness come into this in this asset class, right? Nasdaq, and it's not just Nasdaq, right? The S&P 500 is down. Okay, the Dow 30 is also down. All right, so what is happening? All right, because the interest rates are raising, it's putting a lot of businesses and a lot of these assets, a lot of stocks and companies, is putting it in a place where people are not wanting to put risk on, right? People are not wanting to keep their money in these assets because as long as interest rates go up, these assets are going to go down. It's just the way that it works. So these banks, right, Silicon Valley banks, they had the majority, or they had a lot of money in bonds, right? And if I pull up the bond market, you can actually look at the bond market on your chart. It's under US, it's under ZBH, right? ZBH. And so when we look at the bond market, like you can literally see what's been happening to the bond market. I mean, after Friday, right before Thursday and Friday, there was a major bounce on it, right? But since January, the bond market's just been selling off. Okay, so imagine Silicon Valley Bank owning a lot of bonds, a lot of what we're looking at right now, and just over the last month, just literally just taking pressure as it's been falling and falling and falling. Okay, for a very for a very good amount of time, you could argue they were in a better position, right? Since last November, you could see it was we had bullishness coming in on that, but guess what? Right here, January, we started to see that thing drop off. So all those holdings that the bank had were losing value, and the bank needed capital, it needed liquid, it needed cash. So of course, what happens? They started to liquidate. They started to sell just a little bit, not even a lot. They just started to sell a little bit. You feel me? They started to sell a little bit, but the problem with selling a little bit when you're a bank is that information is public information, right? Your depositors, aka us or business owners for that specific bank, right? They can see that you are selling, and so that caused a panic, right? And the depositors start selling off. All right, and of course they don't have the money to give. Okay, people start to say, hey, I want to withdraw my money, I want to withdraw my money, I want to withdraw my money. They don't have the money to give. I mean, the banks, it's going to fail, right? And so what they made the decision is to go ahead and close up shop. They didn't even try to, they didn't work too hard to try and find out if they could get, a buy-in, or, if they could, try to recover somehow in the market. They just went ahead and closed up shop and let the government take them over. All right, so that's what happened last week. Why is that important? We're talking about the 16th largest bank in the country. Like, let's just talk about it. We're talking about the 16th largest bank in the country. That happened in 24 hours. You didn't hear anything about this before it happened, or most people didn't hear anything about this before it actually happened. It happened very quickly. If that can happen to Silicon Valley Bank this fast, one of the largest banks in America, how fast can it happen to another bank? And just this weekend, another bank actually on Sunday, I can't remember the name of it. Let's look it up, right? New York Bank. Let's just look it up. Boom, Signature Bank, right? Signature Bank actually also was taken over by U.S. officials this weekend. Actually today on Sunday. All right, same thing happened. That's two banks in less than a couple days. All right, so why is this a problem for the economy? Well, the thing about these banks is that if it was just them that was SOL, then it would be cool. It's not just the banks though. Who keeps their money in the bank? Yeah, we keep our money in the bank, but who pays most people, right? Most people get paid by a job. They get paid by a business, right? Where do businesses keep their payroll? They keep their payroll in the bank, right? So if banks are collapsing and they're not able to hold, release funds, right? This starts to slow up the economy in general. This slows up businesses, and if businesses can't pay their employees, they have to furlough or lay off their employees. Starting to sound a little bit familiar, maybe a little bit like 2020 again, right? In certain situations like that start to happen, and that's what goes on. Now, what was announced today, all right, because most people's concern was, whether or not people were going to get their money. Because if Monday, this happened on Friday, which is beautiful for them because you can't withdraw on the weekends technically, right? So if Monday came and people could not withdraw their money, this would have caused mass panic across the market. Like you would go to your bank tomorrow and you would take your money out because you don't even know if you're protected. You don't even know if they're gonna be if the bank is whole, given what's happening to right Silicon Valley Bank. So with that being said, if Monday would have opened up and they still didn't have the capital and they still were not able to make whole, these other individuals, I mean, that would cause just a mass hysteria across, across the just across the economy. People pulling their money out, businesses not being able to pay their employees, and essentially just shutting this thing down, right? So the Fed, it had their back against the wall, just like these banks had their back against the wall. I mean, the bank had no option, right? The interest rates are going up. There's nothing you can do about that, right? I mean, and again, as you saw, even if they would have predicted that, interest rates were going to go up and they started to sell off, that would scare most people, and most people would sell, right? Most people would withdraw, right? And try to take their money out the bank. And of course, as you see what happened last week, that'll cause a collapse. All right. So, pretty much the other option, with that being said, the options to keep that from happening, that collateral damage, that domino effect, the thing that would keep that from happening is potentially if Jerome Powell and the Fed, coming March 22nd, as we're looking, right? As we're looking, right? If March 22nd were to come, right? If March 22nd were to come and the interest rate decision were to release and they decided, you know what, we're going to cut interest rates. We've been raising them, but we're going to actually cut interest rates down, right? We don't want, we don't want to collapse the banks. We don't want to put businesses in a position not to pay their employees, et cetera, et cetera. Well, if they don't cut the interest rates, inflation is going to inflation is on skyrocketing regardless, but it would go into straight hyperinflation, like super hyperinflation, right? We would go through the roof. If you think you're paying a lot for eggs right now, wait till you're paying $20, $25 a box for some eggs, right? If you think you're paying a lot for gas right now, wait till you're paying, $8 to $10 a gallon, right? Because the value of the dollar is dropping because inflation is skyrocketing. You see what the problem is, right? So do you hurt the people now or do you hurt the people later? It doesn't really matter. The truth is that a lot of these things, a lot of these collapses, we just keep bailing ourselves out of, just to be honest. And, a lot of these collapses are known as corrections, right? And corrections have to happen in the market. If corrections don't happen and the market is just blowing, going crazy in one direction, then, you can expect what's going to happen. So we're kind of at a point like that where Jerome Powell, the Fed, their back is against the wall. And going into what we're going to be talking about tonight, which is our, projections and what we're looking for to happen in the market, just to be real with you, they're not gonna cut interest rates. Not in my opinion. they're not going to cut the interest rates. And I mean, not even just my opinion, right? You can actually go and listen to Jerome Powell's speech from this week. He did two of them in front of the House of Representatives and in front of the Senate. He's not lowering interest rates. It's not going down. All right. So he's going to continue to raise interest rates. What do you think that's going to do? It's going to continue to put pressure on the system. Okay. So with that being said, last thing that we'll hit on is that the government, FDIC, did step in, right, and say that everyone who has money in SFB will be able to access their money on Monday, right? A lot of people were worried that this would be, a bailout, and that it would be taxpayers' dollars that are paying towards this. But it's not, right? It's not. The FDIC has reassured that this will be money from the FDIC. And for those of y'all who are not familiar with what the FDIC is, it is the Federal Deposit Insurance Corporation, aka insurance for banks. All right. So your bank pays on a month-to-month, year-to-year basis to make sure that when things like this happen, the government and their insurance company will take care of them. Right. So that's exactly what's happening. The U.S. is using this as a way to show the citizens that they should still have good faith in the economy, and that we will take care of you no matter what. And you should still keep taking out loans, and you should still keep working hard and investing your money. Yeah, that's what this is, right? So it's good news for the time being, right? That the government is going to step in. They're going to make sure that the people who fail to get whose money is inside of Silicon Valley Bank and inside of the other one from the Signature Bank in New York, they will all be able to get their money, and that money will not come out of taxpayers' pockets. So for right now, no crazy major economical collapse, no black swan event today. All right. But I hope that helped, right? If that made a little bit of sense, if you followed, just put a like on the video, let me know. Or if you had a question, if it didn't make that much sense, by all means, ask a question in the chat. That's why we got the chat. But with that being said, we're going to go ahead and dive into the markets, right? I mean, I personally, I was saying this to a friend of mine earlier. I don't think that this is causing anything to happen that we have not already been talking about. All right. We've already been talking about the dollar continuing to rise. And because of raised interest rates, right, we're expecting higher and higher interest rates, that the dollar is going to continue to strive higher. Excuse me. And that would cause assets, indexes, risk on assets that people would invest in, such as stocks, cryptos, right? Seeing those continue to drop. All right. And going into this week, I feel like with that CPI tends to be a very sharp move in one direction and then a sharp move in the other direction before the market actually goes in a direction. I'm looking, and I'm going to show you guys, but I'm looking for the dollar to continue higher, right? Definitely use CPI or use the news this week so that they can probably sweep some liquidity. But again, at the end of the day, in order for anything to move higher or lower, okay, in order for price to move, liquidity is needed in the market. All right, that's necessary. So I think we'll see, bearish movement to, open up the week, or going into some of these news events. We should see some bearish movement. But I think in general, seeing that bearish movement to get some liquidity, get some people to enter into the markets so that the market can actually go ahead and move higher. And that's just talking about specifically the dollar, right? So let's go ahead and dive into some charts, man. Let's dive into some charts, right? Yeah, getting ready for 2024 all day. Let's dive into some charts. We ain't gonna be OD long today, but we're gonna start off on the dollar, right? We're gonna start off on the dollar. Now, of course, before I even wipe my chart, y'all know I like to wipe the chart and we just start fresh, right? But before I wipe my chart, you can already see, okay, you can already see what type of time is going down. Recently, okay, this was last week, right here. You see this gray line. That gray line annotates for me the beginning of last week, and you can see last week we had a run higher before the market traded, pretty much, and closed out bearish on the week, right? The market opened up right about here, right, is where the market opened, and we saw them trade higher and went, took buy side liquidity above these areas here where you see I have them marked off. You can't see them, they're to the left. The market swept up there, and then we got sharp movement down. Where did we get sharp movement down? Right back down to these lows, right? These lows, right? The low of Monday, the low of Wednesday from the previous week, right? Before they went ahead and broke these highs to actually go ahead and take the buy side liquidity. All right. So very conveniently enough, there's definitely a lot of people who took buys here, or, believe in a bullish market here, right? Bullish market here. And those stop losses were located underneath there. Okay. There's a lot of liquidity orders built up right under here. All right. And we saw them literally drop down into that daily sell side liquidity, and do what I call a sweep. And I'll go ahead and wipe my chart now. But yes, you can see that they dropped down below these lows. Here's a low here. Here's a low here. And you can see that they had a sharp drop down right conveniently underneath those lows. And then we had what? A sharp move up, right? Sharp move up. And then, of course, opening up the week, we're seeing how we're starting to play. All right. Now, let me go ahead and pull out to the daily on the dollar. I haven't taken a look at my charts today just yet, but I'm definitely excited. Everything's in alignment. Everything is in alignment. So let's check it out. Let's check her out. Let's check her out. So looking at the dollar, and we can start off on the monthly, right? We can start off on the monthly. Now, February was a bullish month, right? February was our first bullish month since September, right? We have not had a bullish month since September. And literally, February was not only a bullish month, right? February was a bullish month after sweeping the previous, lows here from May of last year, okay? So that was very convenient, but like I've already expressed, we saw them sweep those lows, bang, and then we got our first bullish month. All right. It's not always about them just sweeping lows, right? It's not always about like, did they sweep the low? Like, it's not all about, that. For those of you guys who's been going through the concepts and learning, it's not all about just like, oh yeah, they swept the lows. It's about like, it's about a conjunction of things happening together, right? And when we get a sweep of lows and then we get very aggressive movement out of that area, I start to look for, right? I start looking for the reversals, right? I start looking for the reversals, and the market to start wanting to move in a different direction or having momentum in a different direction. Now, right now, we are looking at the dollar, right? We're looking at the DXY. And at the end of the day, anything that happens with the DXY, any assets are going to move in the opposite direction. Like NASDAQ is going to move in the opposite direction, right? US 30 generally is going to move in the opposite direction, right? Like we're on the weekly right now. And that you'd be able to see it clearly if I went over to the other ones. All right. So with that being said, I'd like to start off on the dollar first, of course. Now dropping down to the weekly, you can see that that first week of February was right here. Like at the bottom is the date. So January 30th opened up, had an accelerate bullish week that week. Then we had another bullish week the first week of February. Literally every week of February except the last week was bullish, right? Literally every week was bullish. Now, the area that stands out to me is this area right here. Okay, because we've already swept down into this. If this market is going to be bullish, there's no reason that they should come back, underneath those zones. If they do, then I have some reevaluating to do. However, there's no reason that they should trade down lower into that. So what I want to pay attention to, I want to pay attention to a couple places. All right, I want to pay attention to a couple places. We're on the daily time frame now, and I've already expressed and I've already broken down how I'm looking now for bullish. I'm looking for where can the market turn around from. All right, and that's going to give me two things. I mean, that's going to give me looking for where the market is going to turn around from is going to give me a target if I were to participate in sells, but it's giving me an entry area to pay attention to look for those buys. All right. Now, when I look at here in this fair value gap, all right, This candle was our last low. This was our next candle following here. And so the gap between the bottom of this candle and the top of this candle, that's one of the highest forms of resistance the way that I trade, right? In ICT concepts, right? That's one of the highest forms of resistance. All right. So that area, it was an area that I was looking for. And actually, you can see CPI of last month, right? You can see that the February 13th of last month right here, we had dips into this area and then we had sharp acceleration out, right? Sharp acceleration out. All right. Now, because of that, I would love to see them get back this gap. All right. You know, if you guys can see that, right? There's a gap right here on the dollar that it bothers me when I see gaps. I always want to see them like dip back in, dip back into them. So worst case scenario, if these zones don't hold, then this is that final destination that I would expect to see them wick to or attack and then see a strong aggressive trade away from. Excuse me. However, right now, that next zone, this is already claimed in the way that I see it. That's already claimed for right now. So what I'm paying attention to is this next low right here. Well, Matt, why that low specifically? Well, like I said, this last low here was a dip into the fair value gap, and then we saw crazy acceleration. And so now I'm paying attention to here, right? I'm paying attention to this sharp move, right, out of the zone. And here we have an area that hasn't been traded back to, right? Also, we can see that the market created a swing low right here. So there's some sell side liquidity right there. Daily sell side liquidity at that. All right. That's the next magnet, right, for the market. That's the next place that, is really attracting the dollar. And it's a lot of bearish momentum on that right now. Okay. So I believe this is the next area that I'm looking at. And just to also put a little bit more confirmation onto it on the daily time frame still. All right, this was the last bearish candle here. So essentially that would be the order block of this big move up. And so me paying attention to the top of this order block up to on the right hand side of that expansion, this next candle. All right, that right there is my fair value gap, right? Bingo, right in there. Okay. Now, clearly, I expect them to travel lower than this because they have to sweep this low. So I can just bring this to the top, to the bottom of the low over here. Another thing that makes that low suspicious, all right, is that there's no candle. There's no wick. You notice that, right? Every other candle, there's a wick towards the bottom. This candle is just flat, all right? Those flat candles tend to be targets, right? Now drop down to the 4-hour time frame and you can see, boom, we have double bottoms on there, right? Double bottoms. And the way that my coach likes to put it is that smooth edges like to be made jagged, right? Smooth edges like to be jagged. So you go to the body and not the wick on the fair value gap. Yeah, I go for the body. And of course the body is a more wider target, right? If I go for the wicks are going to be they're going to be a smaller target. Like if I said from this low here, from this wick right here to that wick right there. Okay. That's one. Okay. Right. That's one area, but from the body to the body, it's a bigger range. So you can go for the wicks, and I believe ICT goes for the wicks. I just give myself a bigger threshold, right? Like I always say, I like to compensate for my experience level. And I've been trading for 5 years. He's been trading for 30. So I like to go for the body just to give me that, like it just makes me feel a little bit more confident in the zone, right? And we can see that the dollar is literally on a tear to that thing, right? We're on the 4-hour time frame right now, and yeah, they're on a tear. But I'm not gonna lie, it all looks convenient. It all looks convenient. All right, so yeah, that's the zone. That's the zone that we're looking at, right? That's the zone that we're looking at. And like I said, I'm gonna put the fair value gap back right there. Right? That's that zone we're looking for. And what are we looking for there, Maverick? Are we gonna buy? Well, no. We want to see how price responds in this zone. I mean, if we're on here like right now and price just blows through that thing, I mean, hey, clearly that ain't the level. And that's why we don't trade on Sundays. However, what I expect and what I anticipate is that we come into this zone, and we'll see some type of rejection. Right? So we see something like a bounce from this zone, or we see a bit of a consolidation in this zone, right? For them to right, give us one of those, right? And anything like that, right? If I see something like this though, that might make that would make me like have to take a second look, right? Because it may mean that we're actually coming down into what this secondary entry that I showed you guys first, right? I showed you guys first that secondary zone, right? But before I'm not gonna skip an area of resistance and then look to the next area of resistance. You get what I'm saying? Like I'm not gonna do that. So this is that next zone that we're looking for. See, you can see it's getting tired a little bit, but if they don't respect that level, then this is very obviously the zone that I'm looking for. Very obviously, right? And yeah. So that's dollar, right? We want to give her some room. Love that we just got this new week opening gap right here, right? Bang, right? We're definitely taking that back, right? We're definitely taking that back within the next first day, 2 of the week, right? So what's it gonna be, right? Is it gonna be that we sweep this sell side liquidity and then we get a trade up into that and then something like this, right? Are we gonna get that, or are we gonna get the pullback sometime today, see something like this go down, right? And who knows? All right, I'm not here for that. I'm just here to see what price is doing in response to that, right? So I'm just doing what we do today on these weekly outlooks is we just set the things that we're looking for, and then based on price being at a certain place that we might have identified today, based on price being at one of those areas at a certain time is what will validate a trade idea for me, right? So let's say that it's tomorrow, let's say it's Tuesday London session, right? Let's say it's Tuesday London session and they dropped down into this zone right here, 3 a.m., and we see them give a sharp move down and a sharp move up right there at 3 a.m. That for me would be buy signaling, right? That's what that would be for me, because it's not just about, oh, we came down into this area, oh, we got bullish movement out of this area. It's about the timing in which it happened. Get what I'm saying? Everything, if it's too good to be a coincidence, it's probably not a coincidence, right? Type of time. So that's what we're looking for on dollar, right? Seeing them take this sell side liquidity and then see bullish price action, right? See some aggressive bullish price action out of that zone. So that is what we're gonna look for on dollar. And I will go down to the 30-minute really quickly. Yeah, this drop right now is very aggressive. I'm not gonna lie to you. I feel like we'll see them sweep this sell side liquidity, if not tonight, going into Monday. Just to be honest with you, that those two, this one engulfing candle, okay, cool, and then another one right after it, okay, cool. Excuse me, but there's nothing that's like really in between. There's like no resistance in between where price is right now and this low right here. So definitely see them attacking that. Now, what does that do for me? Right? That does for me is that I'm able to see that okay, if the dollar is going to go lower, then you have two options. You can either wait for it to get lower, and then you can respond until you see buying price action, right? I recommend that as a beginner is that you stay with the trend. So right now, if they're retracing and they're falling back, the trend is bullish, right? So you just wait until you see that bullish price action, right, where it calms down. Oh, and then we start to get, right, them coming in, and then you can look for these types of opportunities, right, on the way back. Now, you're a little more versatile, a little bit more advanced. then of course, right, now you're thinking, well, okay, if this is where we're gonna head, dollar is gonna then you would be looking to be alongside this movement to this area until you get there, and then you would take profits and you wouldn't be greedy because you expect that the party is going to be over, but you could still utilize and act on that information, right? So based on that, looking at the dollar, let's take a look at NASDAQ. Now, NASDAQ and me was best friends last week. We got a lot of work done. All right, we got a lot of work done. Now, heading over to the daily time frame on NASDAQ, man, has NASDAQ and US 30 oil, they've been taking a little bit of a beating, right? They've been taking a little bit of a beating the past month or two, right? Past 2-3 months. I think the party may be over, right? I think the party may be over. You can see similar to how the dollar had that spike below the lows, right? NASDAQ had a spike here above the body of these highs, right? We had a spike there, and then we got what? Aggressive price movement down, never came back. Just like I was just describing about the dollar, right? Aggressive price move down, right? More aggressive price move down. Okay, boom, more aggressive price move down. All right. And then, of course, we had a bit of a pullback as the dollar is giving a bit of a pullback, right? So we're seeing the dollar drop. And while the dollar is dropping, NAS is moving higher. All right. So where is higher, right? Where is NASDAQ, raising higher to? And that's the question. Now, as of right now, right, as of right now, looking at this daily time frame, today's candle has opened up bullish, right? Monday's candle has opened up bullish, and sometimes that tells me a little bit of stuff, right? Sometimes that tells me a little bit of stuff when we open up in a certain direction. It makes me almost feel like we're gonna go the other direction. I'll back that up with facts, right? But for right now, recently, I'm on the daily time frame right now, and we can see that we had a low, right? This previous low right here, this recent sell side low. Of course, we saw up here they broke this low. We had them drop down and continue, essentially, right? Not only did they break it, but they broke it, retested it here, and continued to trade away. And that made this the next target. And you can see that we had, boom, one hit below this liquidity, and then we got acceleration away, and then we got another. Okay, and then what are we getting right now? Some acceleration away. But truthfully, depending on how dollar operates, right? Like if we see the dollar actually go ahead and shoot for this area, and then we see that aggressive movement away, we would see the same for NASDAQ in the opposite direction, right? We would see aggressive move down for NASDAQ if the dollar gives us that aggressive move up. Okay, so recently we had this sell side liquidity here taken on the dollar, and then this became our new sell side liquidity, and we can see even here on Friday they kind of tapped, into that. So what I'm gonna do is I'm gonna mark this as our next daily sell side liquidity, given that we've already swept here and we've technically already swept here. All right, I'm going to mark that. And I'm going to look at my buy side liquidity, right? I'm going to look at where to the top is the most recent place where I could identify a high, right? And this here last week, Thursday, was the most recent high on NASDAQ. So that's my range. All right, that's the range that I'm paying attention to. On NASDAQ especially, I'm more of a intraday trader, but I'm not going to lie, NASDAQ moves so fast that I really end up just scalping NASDAQ, taking my opportunities. But yes, so we saw a heavy shift. We saw a quick shift down here on NASDAQ on Friday where they swept those lows we were looking at, right? So there's that sell side liquidity sweep. Boom. They swept here, and then we saw this sharp move away. All right, so here's the thing. On this lower time frame, clearly we can see buy side here, and this is the fair value gap that I would be paying attention to. Going down to the 1 hour time frame, after seeing a move like this, and then seeing this sharp aggressive trade higher, markets trading higher. Um, this high is a target for me, and potentially this high, but for right now, given I expect that the dollar will continue to, and it's really making its way there. It might hit that thing before while we're still on this call. But as long as the dollar has this strength to trade lower, I expect that NAS will trade higher, right? If I was trading today, and I don't necessarily plan to take a trade on a Sunday night, but if it was just that obvious, you will see me enter a trade on a Sunday night. But it's not that obvious to me right now. I'm just going to be honest, it's not, right? I like to collect data on a Sunday night and a Monday even, right? And that way I feel a lot more confident. It's not to say you can't find a setup. It's not to say you can't make money. You probably can. But for me and my rules, like I feel a lot more confident when I've had a chance to see what the markets are wanting to offer at the beginning of the week. Now, with that being said, let me check this out real quick. All right, let me check this out real quick. Let's go back to the daily one time. Yeah, so on the daily, I'll point out we had them wick into this fair value gap up here. You see that? All right, this was the fair value gap here after they took highs up here, right? So they took the highs up here. We saw the sharp move down, and we saw them trade back into the fair value gap, and then we saw them drop down, boom, liquidate these lows here. Now, what I would have preferred to see, right? I would have preferred, they gave it here, right? They gave it here. They gave us the close lower, right? They closed lower. See, over here, the market traded down below this low over here, right? It traded down, but it ended up closing higher, right? And that could still give me bullish momentum, right? But then we came higher, came into the fair value gap, sharp move away, and what closed lower than the previous low, and this low closed lower than this low here, right? So this move did sweep liquidity here, right? Swept more, down, again, I guess you say, underneath these lows over here. And because of that, the thing is that on this daily time frame, this is still a lower low, right? And that's just me using regular market structure to help me out a little bit, right? This is still a lower low. And so after lower lows, what do I typically look for? Typically look for the lower highs, right? Look for the market to give a lower high. Now, based off of this last move that went on, this move here broke this low. Okay, this move here is the move that created a lower low. All right, so I typically, in a downtrended market, when we've had a new low created, I'll typically look at the movement, right, the expansion that created the new low, and I'll do two things. I'll run my fib from the high to the low, and I'll take into account the halfway point of the range, and I'll take into account the premium of the range in a bearish market. Premium means where would sellers be interested? Just like literally just that simple. Like if I'm selling something for $100 and then all of a sudden everybody else is selling it for 20, I'm blown. First of all, like I'm like, man, wow, that's crazy. I don't want to sell my thing that I was selling for $100 for $20, but then all of a sudden people start buying it for 60% more. Like, so instead of having to sell it for 20, you could sell it for 80 again. You will sell so fast, right? So imagine the top of this line is $100, right? But then all of a sudden people dropped down and they started buying it for 20 and selling it for 20. But then that area that would really catch your attention is if they were selling it again for $80. You would sell real quick, right? And that's the idea behind what a premium is, or how I use a premium, right? Just might take it. I look, I feel you, right? And so like, I like to go based on the premium. And so yeah, I identify that premium. Now that premium is a little higher than what I was looking at, but I'm looking at this area here, right? This AKA fair value gap, right? I'm looking at this as a suspicious area where if dollar goes ahead and sweeps that sell side liquidity here, as we're talking about, bang, yo, look at them go, man. Look at them go. They're wilding out on this Sunday morning. They're wilding out. But not just Sunday morning, I'm bugging. Sunday night, right? But at the end of the day, if the dollar is really going to go ahead and short down, take that sell side liquidity, and rejects, okay, that's how I pay attention to it. If I see the dollar reject from this area, then that would confirm for me that I am looking for these sell opportunities off this retracement on NASDAQ. If I were to see the dollar do something more like break through this and close lower, right? Maybe close down in here, right? If I would have saw, if I see something like that, I'm anticipating we're coming down to this low, right? Because once we've already closed lower, we now gave a lower low, and I would anticipate then a lower high so that they could make their way down, grab this, and then once we get in here, reevaluate for the buys, right? But as of right now, again, that's that zone we're looking at. The only way that I would really participate in the buys on this, all right, is if they were to give a retracement down into this fair value gap. Right, that's really the only way, right? If they were to give a sell back into that fair value gap, and even better, right, I'll mess around and be looking right chill, right? Even I'll be looking right there, right? And so if I were to get a trade, if they were to drop back down into this zone before the dollar were to take this sell side liquidity, I would be willing to take buys on that opportunity, because I know the dollar needs to still go lower. I know that the dollar is still going to give me some influence on NASDAQ. So if they come back into this zone right here and the dollar has not taken that sell side liquidity, I am very comfortable putting myself on the side of the market, right? Getting in on buys with my stop loss below these lows, because they should not make their way back lower, under there. And target that a fair value gap here that we talked about on the higher time frame, or that premium that I showed you guys on the higher time frame. And final, you could really attack that buy side, but given that I'm bearish on the market, I don't expect them to really go all the way for that, right? I'll just take my TPs, my TPs where they're at. So that would be the only way that I would take interest on those buys. But other than that, I would be looking on NASDAQ. I would be looking for an opportunity to see them sweep into here somehow, right? See them sweep above these highs, right? Above the equilibriums into this fair value gap period. And worst case scenario, inside of this premium, if these levels get broken, then this is the zone. I could lose trades, like it doesn't matter. It's like when proper risk management, it don't matter if I lose, right? But I just like to have scenarios, and then the next scenario if that scenario plays out, and then the next scenario if that one, right? I just like to be able to base things, like that. So with that being said, yeah, that is my view on the NASDAQ. On the NASDAQ. And I wouldn't, me personally, I wouldn't take that 90 point stop loss on NASDAQ. I would, if the timing would have to be right for me. So like, that's why I say like, I'm not tripping. But like, say that New York session, like say we're at the open of New York tomorrow and the dollar still hasn't taken that sell side liquidity, and, NASDAQ is right inside of this area. On me, I'm on the 5 minute just like this, and I'm looking for those opportunities so I can make this max a 40 point stop, 40, but down to even 15, right? If I can get it. And then, like I said, targeting, up there into that premium or just over that equilibrium. That's the only way that I would participate in that buy. Like I said, is if the sell side liquidity on dollar still had not been swept and price traded back into that. I would be looking for that. And honestly, I'm gonna just be honest, I didn't take this. Honestly, I'm gonna just be honest, I think US 30 actually looks better, right? You got to remember, these indices, they correlate with each other, all right? They correlate. So you're gonna have, I'll be able to look at NASDAQ, and I'll be able to look at NASDAQ, and I'll be able to look at US 30, and I'll be able to look at SPX and see all similar movements happening and make a decision as to which one I feel is the best for me right now. You get what I'm saying? Now, when I look at US 30, you can see where I'm already aiming, right? It's a little bit more clear for me on US 30, and that's why I was taking those sells on US 30 right here. But either way it goes, we saw them just now drop down, right? They didn't come take the wick as I was looking for them to. But they dropped enough, right? They dropped down below the body, right? And just a wick below the body, which is, again, another tell, right? Because why not just, like, literally, they could have just dropped just a couple more points and the candle would have closed below the bodies, even if it didn't go below the wick. But they didn't, right? And nothing happens by accident, right? So we did see them sweep into that daily sell side liquidity, right? We did see that clean sweep. They even manufactured liquidity, as I like to call it, where they formed new lows, gave a high, and swept those lows. And then now they're going up to go ahead and form new highs. All right. Now, like I said, US 30 looks a lot cleaner to me. So if those buys were to get taken, it would be on US 30 most likely for me, right? Into that in that area. And again, seeing them come down, my stop loss would not be, all right, my stop loss wouldn't be anywhere lower than, would not be anywhere lower than there. And I'm still on the 1 hour right now, so I still wouldn't even take this at the 161 stop loss. This is just me framing a trade. I guess that's not what I would call it. This is just me framing a trade idea. And based off this framed trade idea, I will pay attention to the markets while during my trading hours. And if we are in these types of zones at specific times, London session open, New York session open, pre-New York, 1 o'clock, whatever, at those specific times, if I'm at certain places in the market, then guess what I'm gonna do? Then I'm gonna go down onto my lower time frame and I'm gonna sharpen up my trade. I'm gonna go ahead and move the stop loss a little bit tighter. I'm gonna compare it based off of the lower time frame lows, etc., etc. But this looks so textbook right now. I'm just gonna be honest with you. Looks so textbook. The other thing about US 30 is that you can see they're building up a lot of they're building up a lot of resistance on this side. You can see there's multiple highs, high, and price is now above that. So coming back into this, there's going to be a lot of resistance from this area, right? But when I look at this high over here, there's not a lot of lows to protect it. It was just this big drop off, and then before it maybe just a lower too, right? But over here you can see it's a lot of just constriction, right? A lot of resistance that could hold the market, that could be a floor for the market, right? So that just gives me even more confirmation. The last thing that gives me confirmation is y'all know I love to just the maverick mindset, right? Just having that mindset of doing things differently than other people. That's what maverick's mindset is. It's not like just me. And so when I think from the perspective of what most people are thinking about, well, what is on the news right now? Silicon Valley Bank. Guys, this is some sauce. Silicon Valley Bank is on the news right now. So that means everybody is thinking about what? Silicon Valley Bank. Why did Silicon Valley Bank crash? Silicon Valley Bank crashed because it was selling bonds, right? They sold their bonds. Their depositors saw that, so their depositors started to withdraw because they were worried that something was wrong, right? So if the majority of the people watching the news are like, "Oh man, yeah, stocks are going down, bonds are going down. Oh my goodness, it's all bad." What do you think is gonna happen? Oh man, yeah, this market is so fun. It's just so fun how they set it up. But they've literally set it up. They've literally set the stage for a bullish, if not week, at least a bullish start to the week, because through the whole weekend, you got a whole bunch of people looking forward to things dropping, right? You got a whole bunch of people looking forward to things dropping off. So it actually makes a lot of sense to me that we would see, this high get ran on US 30. And then just looking at this overall drop off, seeing them trade back into this, and then getting that very aggressive sell off once people started to feel like, yeah, the markets are, they're recovering, or it's not as bad as we thought it was, et cetera, et cetera. So now that US 30, and I know I spent most of the time today on indices, but look, man, I'm not gonna lie, there was some major sauce in there. But now that we have on US 30, see them just spiked above this buy side liquidity here from market open. Could expect for them to retrace now back into that zone because they've gotten liquidity there, or maybe here, right? But if they close above either of these areas, then yeah, setups invalidated. If dollar, well, look at the damn dollar. Look at the dang dollar. Dollar just swept the sell side liquidity. Boom, boom, boom. Right. So dollar just went ahead and dipped into that sell side liquidity. All right. And very convenient, right? Very conveniently, they're dipping into this sell side liquidity. And just remember that we have this area right here. Okay. So the dollar just came into an area where they can pick up some gas, aka, right? They can put some gas in the car. That's what liquidity is for the markets. It's gas, right? So they're in an area right now where they can grab some liquidity, and they have an area they need to get to, which is right here. Right. So I would definitely keep that in mind. But like I said, that this right here probably not gonna go down. Yeah, that buy on NAS or even US 30, it may not be going down, like I said, because I would have been extremely confident in getting those opportunities if we would trade it into those areas before the dollar had reached this sell side liquidity, right? But now that the dollar has traded into this sell side liquidity, right, I'm looking to see if we're going to get that sharp rejection, right? That's what I want to see. I want to see a sharp rejection away from here, right? And then the question is that just a sharp rejection to trade back into this zone before we actually go ahead and attack lower? And that's what I want to see without like going down a rabbit hole with you guys. Again, we've already been on here for an hour, but right now, what I would like to see from the dollar is how we respond now that we've taken this, right? Are we going to get that aggressive push higher into here? And if we do, is that going to be just so that we can sell lower? Or is that going to be a real push where they close above and they actually go ahead and start attacking the highs? Because there's plenty for the dollar to attack to. Just to be honest, it's plenty for them to attack to. The question is just timing. It's just timing. That's literally it, right? I would still keep my eyes on this area. I would definitely keep my eyes on this area, especially with CPI, right, dropping on Tuesday. I would definitely have my eyes open. Do not recommend that you trade CPI. I highly recommend you watch CPI. And then once the news has transpired and the bodies have hit the floor, that's when you go ahead and you walk out onto the charts, out into the market, and you find those opportunities, right? You find those opportunities that'll serve you. But that's what I'm looking at. I mean, everything is really in conjunction though, right? I looked at NASDAQ and US 30, and my ideas on NASDAQ and US 30 will be similar to these foreign currencies, right? Now, interestingly enough, we just saw Euro USD trade above daily buy side liquidity at the same time that the dollar traded below, right, daily sell side liquidity, right? Even GU, right? Even GU might be a little bit more interesting, right? Because we're not so far above it yet. And I say that because when I look at EU, this is that daily sell side here. And then we saw them give that aggressive trade, that aggressive shoot above it, whereas GU is like still kind of like right underneath it, right? They can still do whatever in the world they want to. And just giving y'all that cheat code, right? We saw markets here drop and break this low. So I would run my fib from this high down to this low, kind of get an idea as to where maybe the markets might want to come back up to, right? And you can see this looks very promising as the premium. But then when I go back to EU look a little ready, right? EU look a little ready because I think that's why I actually have that there. This was that move here that went ahead and took EU lower. And so I'll just throw my fib from the high to the low on that. And that's where this red box is that we have right here. It's the premium, and that's where EU just traded into. So EU might be actually a smoother move for Monday. It might be a smoother move for Monday, or tonight for those y'all who trade on Sunday nights, because we got that opening gap right here for them to attack. And then we have them trading up above buy side liquidity, but it's just a little bit aggressive for my liking. Like I said, I don't like when we get this aggressiveness into that type of area. I like to see the wick and then the trade away. When I get aggressiveness, it doesn't make me feel like like we're about to drop back the opposite direction. It doesn't give me those vibes. And it's difficult to find the move that I'm looking for based off of just those. They kind of took it, right, or they aggressively took it. I would prefer that they kind of took it. That's what I meant. Maybe if I let me give you an example before we tap out of here. Right, like here, right, like this is what I like to see, where we got a high, and then you see they kind of took it, and then we got the aggressive trade-off, right? And that's the type of price action I like to see. Where you see right now, what we're getting is we got the sharp move into it, right? But we still got another 2 hours left on this 4 hour candle, right? Still got another 2 hours left. So I'm gonna let them show their hand, right? And then going into New York session tomorrow, maybe if it's more so my type of zone, like maybe if they actually go ahead and give the trade lower, we see them drop back down to here, and then we see them trade up into it a little bit. Maybe that's something I'll pay attention to. But for right now, I mean, everything is moving. Everything is moving very crispy, man. Everything is moving very crispy. I missed this UJ sell last week. Just a hair, man. It was like a hair. Stopped me out. But even UJ, man, like even UJ is trying to act like they let me see. Did UJ just sweep some liquidity? Yeah, UJ finally went ahead and dropped down below daily sell side liquidity right here on UJ. Right there. Finally saw them drop down below that. So question is, going into tomorrow, how are we going to respond, right? Are we going to see aggressive price action higher out of this area, just like the dollar, and then I can look for my buy opportunities up out of here? Or, are they setting up for us to go lower still, right? And again, this would all depend on dollar, right? Are we just wicking down into this? Are we giving a kinda, like I said, is this going to be a kinda liquidity grab, or is this going to be a like we're closing down there, then we're going to retrace and we're going to go even further, and we need to get ours and we're going to come all the way down there, right? So that's my take going into this week. It's 11:06 on the East Coast now. Definitely hope y'all were able to get value. Definitely just my thoughts on what, just me speaking from my perspective and speaking from my experience, what I think is going to go down. So with that being said, man, y'all leave a like on here, comment, if you have questions or if you learned something. It really helps me to hear from you guys. But with that being said, man, I will see you guys next week, Sunday, 10 p.m. Eastern, for the next weekly outlook. And we're gonna keep this thing going, right? For everybody who's in the guild, see you guys Tuesday at 8:15 a.m. in the trading floor, and we'll get live, man. Y'all have a good night.